and on the day down 242 points. So certainly very volatile. Let's get a little bit more clarity and detail and perspective on what we're seeing right now and bring in Diana Avigdor. She's the head of trading at Barometer Capital Management. Diana, interesting to see the movements as, you know, we head into the closing bells. You know, I was mentioning before we headed to break, corporate buybacks. I mean, they can't be in the market 10 minutes before the close and 10 minutes after the open. I wonder how much of a factor that has even been in helping the market stabilize. What are you thinking?
First of all, you're absolutely right, and certainly it takes away one support, and dealers have been talking a lot about these buybacks coming back into the market, but these buybacks have existed for several years now, so I'm going to take that as a base case. I think what happened starting last week, it's not so much what happened, it's so much it's the speed with which it happened. So I'm sure everybody has been talking about how there's been some systematic selling that derives from certain non-fundamental, different kind of volatility targeting product. And when things move in a fast way, the existing positioning needs to be rebalanced in a fast way. And the second thing that's happening, and this has to do also with the close, and the more days this goes on, the more obvious this is becoming, is that market makers, the market today, the way the structure is, does not have the mechanism to stabilize it in a very strong way. So market makers pull away, and if they're there, they make markets in much, much smaller increments. So we've been hearing from dealers the last 2-3 trading days that S&P minis, for example, the futures, which trade a lot, you know, at the top of the book, which is the best bid, best offer, if you used to be able to sell or buy 100 futures, you would be able to only do 50 or 25. So that takes the liquidity, the immediate liquidity out by, you know, almost 50% at a certain price level. And so it makes it easier to push a certain security in a particular way up or down.
So where do you think people are trying to push it? I mean, what do you actually think is going on? There's less liquidity. We've always worried about that, or certainly have been over the past number of years. But what do you think that the trade is trying to do right now? What are people actually really trying to do? Are they trying to get out of positions? Do you think hedge funds are needing to sell? Are we still seeing the unwinding of leverage products? What's your sense?
I think that we've done a lot of the unwinding of the leverage product. Volumes have been very elevated for the last few days. We've gone from almost 150% higher than normal, so almost double and a half, to you know, slowly tapering this extra off. We're still trading at very elevated levels, so the volume is there. It's the liquidity at a certain price point that I'm talking about, so it's easy to move it from one direction to the next. In answer to your question, I think what started as a deleveraging and the rebalancing product that began with volatility products that are out there that, you know, some people have invested in, that, you know, they're products that are derivatives of derivatives, really.
Yes.
Right now what we're seeing is with the U.S. 10-year yield moving back up to where this whole thing started. So while we've moved away from focusing on the rates and watched all this money sloshing around the market in a deleverage fashion, I think right now with the yield, 10-year Treasury yield moving back up on decent numbers, I think it brought out some maybe vanilla selling, what we call it, fundamental selling. I think that's what we're seeing today. Whether it's for hedging purposes a little bit, don't forget January was a very big flow month, and some people have reached up to invest that money at market highs. You know, this trade down, the speed with which it's going down, it's also the speed with which it has gone up. It felt like it was going up every half hour and without respite. Now it feels the opposite, because the opposite is going on. I think that this is a great opportunity. You're really not getting a lot of opportunities, and will not get a lot of opportunities to buy a market at a discount like this at a time when the economic global growth is going on, at a time when earnings have been fantastic, including top-line revenue. So, you know, I think this is quite an opportunity. Don't know if you're going to pick the low. You can never pick the low, but this is certainly a market on sale that we should take an opportunity to take advantage of.
Okay, Diana, great to get your views today. Thank you very much.
Thank you.
Thank you.